Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today, I want to help you to define and understand the term volatility. This is a question that y'all ask, and when y'all ask, I answer. So, the question is, what is volatility? What does it really mean? And when is it good or bad or high or low? And that's a really good question because I think most of us pretty much understand what volatility is. That is the turbulence of the stock market. That's when things get real janky, is one of the terms you can use. It's when, we saw the other day, I think it was maybe a week ago, where it was like the best day of the year. And then other times this is the worst drop since last year. In 2020, we saw a lot of these where it was the worst day since the Black Monday in the 1980s. And then 2 weeks later, it was the best day since the 1930s, where you see these wild swings from good to bad. But how do we measure it? How do we know what is normal and what is good and bad when it comes to volatility? Well, thankfully we have a measure, and it is called the VIX. VIX is the volatility index, and it measures volatility from a high level, entire stock market, not any individual stock, but if we're looking at the entire stock market, is it hot? Is it cold? What's going on here? Now, some people call it the fear index, and it kind of goes back to Warren Buffett's famous quote, and I'm probably going to quote it wrong, but it's be greedy when people are fearful, be fearful when people are greedy, meaning that when the volatility is up and people are selling left and right, might be time for you to go in and get you some things for a discount, right? And the opposite thing is when the market is shooting up and things are great, no one's talking about volatility, it might be time to kind of sit back and relax. Now, my view is you should stay consistent regardless of what's going on. Y'all know how I feel about dollar cost averaging, DCA, and just keep buying anyway. However, when things are crazy, when the market does kind of act a fool, there are times where I might DCA a little bit more aggressively than what I normally would. If I'm doing $100 a week, things are really, really volatile, maybe I'm putting in a little extra and trying to get me just a little bit more, but I'm staying as consistent as possible because I don't control volatility, right? None of us really do. You don't know when it's coming. You don't, and you don't know how long it's going to be there. So let's talk about what's normal, what are that regular threshold. So most people, and every article you read is going to have a different number, okay? But most people are saying that the average volatility, or the average VIX number, the VIX, the index that measures volatility, is anywhere between 17 to 20. Now, as of the recording of this video, it's at 16.5, which means that it ain't that volatile right now, which it's just normal. This is okay. However, excuse me. When people say that it's on the high side, the average is around 30. Once it starts to approach 30, things are gonna get a little crazy. And this is gonna paint a picture here. So what I'm gonna do is actually go back and kind of give you some dates from 2020, because that was a very volatile year, and show you how volatile it was. So let's go back and let's talk about those underpinnings real quick. So 16 is what it is as of the recording of this video. I'm doing something like a Sunday night. I was going to say April, August 8th. So Sunday night recording this, right now it's at 16.5, okay? 30 is considered to be high, okay? 30 is high. So if we go all the way back, beginning of 2020, and we go to 3/9, so this is March 9th, 2020, the VIX was, so on 3/9, it was 57, and it peaked at 3/16, so March 16th at 66. Now, if you remember, it's a height of the coronavirus pandemic. The stock market absolutely crashed within a few days, really within just a few weeks, and the market recovered, blah, blah, blah. But 66, if 30 is high, 66 is absolutely crazy. If you want to have a fun experiment, you can go to Google and type in just, stock market 2020 March 16th and see all the headlines that came out right around that area. And again, it was wild. So you'll see, March 16th, March 23rd, it's at 65, and then it starts to kind of dip down to 36 by June of 2020, June 8th to be specific, but it was still relatively high. If I go over on October 26th, just a few days before my birthday, it's at 36, which is still high. And there's another peak on January 25th, which is at 33, and then it starts to really inch down to where we are today, or right around where we are today at about 16 or so. But if you go back and check the headlines, obviously from March and April, it was a wild time to be an investor. Things were really, really cheap. If you bought in during that time, you probably made a whole lot of money, right? Because things were dirt cheap, and then the stock market kind of took off. But that gives you an idea of what is ridiculous and what is crazy, right? So anything in the 60s is wild. It didn't happen all the time, but that's like shocking, right? That's put on your seatbelts, all that stuff. The plane is going down, or at least it's going to feel like it in that type of turbulence and that type of volatility. 16, 20, nah, normal. 30, all right, something about to happen, right? Things aren't all sweet, and anything above that is wild. So I'm also going to do something real quick and go back 5 years and see if there are any other spikes. If you were to look at the chart, I really wish I should have did a screen share, but you can do this at Yahoo Finance and others. 66 is by and large the highest peak here. You can go back to 2019, December 2018. It was the high was 30, and that's the highest it was in the past 5 years. December 2018, December 17th to be exact, 2018, it was at 30, and it was quiet ever since until we hit the coronavirus pandemic, and it just took off. So that just gives you an idea what's going on, what it means, and what's good or bad. Now when it comes to like how much money will you actually make or lose, depends on what you invest in. Some things will be in line with the VIX, whereas the VIX shoots up, your stock shoots down. There are some that are the complete opposite. So it really depends on what you invest in. Volatility is normal. Obviously, it's at 16, so you're gonna get some normal volatility. Definitely around earnings time. I mentioned Square, we did a video on that. It shot up 10%. That's not normal, right, on a regular day, but it was volatile that day, which is fine, but it's only one stock. As the entire stock market, we use the VIX to kind of measure that and give you an idea of what's going on, how are people feeling, and how crazy the stock market is. So let me know if that helps. I think it did, but let me know if that helps. That should really kind of give you an idea of how to measure volatility, what it means for the market. And if you were investing this time last year, it definitely makes sense. If you're new, go back and read those headlines. Go back and actually read those articles to see how wild it was at that point in time. But that's it for me. Talk to you guys later.